This is a bar chart of infrastructure spending in the United States, and mystery to no one, it's going up and to the right and going up and to the right quickly. But trends like these tend to get chased in the stock market, and individual stocks can get very dislocated. Let's go through an example of what we're talking about in this big infrastructure spend and change in dollars for the United States of America. So we're going to take a look at a specific example, and that example is Caterpillar. Before we do that, take a look at AUM within the ETFs in the infrastructure subsector. These ETFs are getting money up and to the right, just like infrastructure spend is. That's okay, but we're going to look at Caterpillar and why that is totally dislocated in our opinion based on this money in. So historically, Caterpillar has had very uneven growth, and it's had about a net income margin of maybe 9 or 10%, right? In 2025 and 2026, the revenue growth jumped from 0 to 1% to about 10%, and the net income margin jumped from 9% to about 17%. So for the first time in history, Caterpillar probably deserved an above market PE. Take a look at the PE 2021 through mid-25. It's all just a little bit under 20x. And then you see this massive expansion here as it becomes a growth company. So the issue with this isn't that Caterpillar didn't deserve a slightly higher PE. It is that the ETF money and the passive money in the Dow chased this stock well beyond what we think it is worth. Take a look, 20 PE right here. It probably justified all the way up to about a 30 PE. But because the Dow is price weighted and Caterpillar is a $700-800 stock at the time, it has to buy more and more stock every dollar that comes into the Dow. That just pushes it higher and higher. In fact, Caterpillar was the #1 name in the Dow for a short amount of time. This PE went all the way to 50, which we think is inappropriate for Caterpillar, but these passive and infrastructure ETFs won't sell it. They are not looking at valuation, but active managers are. So what would we do as active managers here? If you can get into Caterpillar as it's going up, there's a lot of justification for this level. However, you need to be an active manager if you want them to sell here. The Dow did not take its weighting down. The infrastructure ETFs did not take its weighting down. It just let them float up and higher. We, as active managers, would definitely be sellers somewhere in here when we thought the PE was inappropriate and the valuation of the company didn't leave you as an outperformer. If you like this analysis and want to see more, we have a daily note. The link is in the description. Take a look. Happy to send it to you free every day.